I'm 65 and look forward to retiring in 2 years. If I'm not working anymore in retirement, my income taxes go away, right? Well, it's kind of a... Well, go ahead, David.
Well, under current law, most likely no.
Yeah.
Obviously, legislatures can change things. If you retire, and it sounds like you're going to retire at 67, for most people today, that's what's called full retirement age when it comes to Social Security. Now, if you only have Social Security income and no other income whatsoever, no interest income, dividends, no withdrawals from retirement accounts that have been tax deferred, you could be tax-free. However, the minute you have income from another source, not only do you pay tax on that income, you will then pay tax on $1 of your Social Security income. So in other words, you basically get double tax. And again, this is where people get confused. Well, I'm in a low tax bracket. Well, are you really? You see that $1,000 distribution you took out of your IRA to maybe give a gift to your grandchild actually has caused you to sometimes pay over 51% in taxes. We show this all the time.
Because you get taxed on the withdrawal, and then it triggers a tax on your Social Security?
Correct.
Yeah, there's that double whammy.
Yep.
Oh, my goodness.
And if you happen to already be on Medicare and you had too much income, you could create other taxes. So
that's
again,
the IRMA problem, isn't it?
Yeah. So, no, unfortunately, you're probably not tax-free unless you've proactively set up a tax plan. Now, we potentially could get you to a 0% tax bracket. In fact, almost 4 out of 10 prospective clients that come meet with us, we can eventually get them to a 0% income tax bracket, but it does not happen overnight. It typically is going to take 4 to 6 years of a rigorous planning to show you how to efficiently move money from one tax bucket to the other. There's only 3 kinds of money, folks, when it comes to the IRS. There's taxable, tax deferred, and tax free. Which one do you want?
Well, and so behind all of that is what we call the Roth conversion, right?
Absolutely.
That
is one of many strategies.
I find myself in conversations with people who say, boy, one thing I'm looking forward to in retirement is I won't be working anymore and drawing a paycheck, so I won't have to worry about taxes anymore. Well, but wait a minute. If all of your 401k or IRA funds were in one of those tax-deferred accounts, you were told, defer. Well, remember, when you start drawing from those accounts, that's going to be taxed unless you do something about it. That's where the Roth conversion, take your tax hit up front while it's lower, so when you actually do take out large sums of money, it'll be tax-free.
I was sitting down with one of our advisors with a new client in our Lincoln office here just a couple weeks ago, and they were very successful, owned a business, and saved diligently, did all the things, stepped into retirement, and then got smacked with all these extra tax liabilities and had no idea. Their advisor at the time didn't tell them, and their tax professional didn't tell them. And they were paying 4 of those IRMA or Medicare penalty lines each every year. They were paying almost $8,000 in penalty taxes, plus taxation on their Social Security, which they weren't aware of. And so they had a tax liability in 6 figures now. They're doing quite well, but it was about $50,000 more than they thought they were going to pay, and very easily could have been avoided with a little bit of proactive planning.